We see most of the opportunities, of course, in the equity market. I think we have seen rates going up slowly, but the rates itself, it's still on a very low level. And then you have the duration risk, of course, because rates from here still can move higher. So we're still forecasting around 1.45 for the 10-year treasuries over the next couple of months. So that's a little bit higher than what we have seen already over the last few days. And that's a drag on the bond side. And then on the equity side, I think we're coming in a really sweet spot. The vaccines have been extremely successful. The US had already more than 100 million probably of people that are immune, including the one that had COVID and the one that were not registered, plus 50 million that has been vaccinated. And we see hospitalization rates are coming down very quickly in the US, in Israel, in the UK. These are the leaders in the vaccination approach. And that should sort of lead to a reopening up of these economies. We expect very strong earnings growth. So we are rather in equities than on the bond side. We just moved our US investment grade outlook to least preferred as an asset class. We think equities overall is the most interesting asset class, in particular emerging markets, where we see biggest upsides currently.
So emerging markets and emerging market equities are being favored, but if you're moving out of investment grade credit, are you also looking at value in junk bonds, in high yield bonds, where it seems like activity is picking up, buying interest is picking up?
Well, spreads have come down a lot already in the US, so there's a few pockets still left, of course. So we like, for example, US senior loans, and it's also a very short duration trade as well, and it has nice spreads. But then you probably move to Asia, and that becomes a bit more interesting. So we like Asian high yield. That's probably one of our favorite asset class within the credit space. Chinese high yield particular. So if you buy Asian high yield, you have to like Chinese real estate. It's around 50% of the index. But we're actually quite positive that after some of the wobbles we have seen in the credit space in China, particularly on the property side, that the headwinds are slowly fading. The PBOC gives more support. The issues itself have done their homework, and we're actually quite positive on the asset class and sub-asset class at this point.